Good morning, ladies and gentlemen. Let's see if we can't get this music going. There we go. All right. What's up, people? It's hump day. Let's go. Good morning, y'all. Again, what's up? What's up? What's up? GTA, Mr. Brooks, bullfrogging. What's poppin'? Happy hump day. Let's get it going. Lots of interesting stuff going on today. Let me turn this music down a little bit. You got Jay Powell talking over in Portugal. Hold on one second. All right. I had a wild dog at the door. She wanted to say hi. Start this day off. Let's go, baby girl. Ooh, ooh. Hit it, baby girl. What's up? Guten Morgen, Germ Corp. Hold on one quick second. All right. Sorry about that. We ready to go now? She's a heavy one nowadays. So yeah, we got Jay Powell talking, and then we've got Biden giving a major economic speech today. That's what they're calling it, a major economic speech. So I think that is coming this morning. They don't really say specific times with him, whenever they can get to roll him out. But we'll see what kind of impact that has. We had Micron's earnings after the bell last night, so semiconductors were getting hammered. Let's see if that's still going on. Yeah, they're down across the board. Broadcom down 1%, Qualcomm down 1%, Intel down 1%, Nvidia down 3% in the pre-market, Taiwan Semi down over 1%, AMD down almost 3%. So that's two reasons that's happening. So Micron's earnings weren't great, but then we also have the potential, and it may actually be talked about at this speech, Biden potentially putting a ban on the selling to China of certain AI chips. So that could have an effect on a lot of these companies, and it's already showing today. Which is why I like Amazon here with these chips. I mean, Nvidia is still going to be a powerhouse, but I think we got kind of duped on that big run up with Nvidia. Well, you know what's really interesting about that submarine GTA? If you listen to the whole thing's suspicious, and I'm by no means saying that anybody intentionally sabotaged it or anything like that, but I do think that it was used as a distraction. I think they knew My concern is fuck the media. You know, it's our fault if we listen to them. But my concern is how much money was wasted on a potential rescue if they knew. I mean, James Cameron, who makes movies, granted the guy's been to the ocean or been to the site of the Titanic, I think 30 something times. So he knows a thing or two about submarine, whatever they're calling it. They had a fancy word for it. It was like recreational adventure exploring vehicle or some shit. But even he said that he knew just based off of the sonar that first boom, they knew what was going on. And he said they lost radar communications and telecommunications at the same time. He knew that they were done. So I think, you know, when it comes to the media, either they're running cover for a bigger story that's happening behind the scenes, or they're just so desperate for clicks because legacy media is failing so much. So you never know. Good morning, my lady. Good to see you. Good to see you. Hope you're doing well. Hope Nunya's doing well. I know he's been a busy man lately. Hope everything is good with him. But please give him my love if he's around. Well, how come only drones can go see Titanic 2 miles underwater, but can go walk on the moon in special suits called spacesuits? Yeah, I don't know. Corporate America, but so I figured we'd start off with a little feel good video from SNL. I forget what year this aired. It was in the 90s. It only aired one time. It's just a little clip, but it's funny. And it's funny that they ever allowed it to be played. That's the real funny part. But yeah, it only aired one time, and it was taken off of We'll probably get kicked off of YouTube just for playing it, but oh well. It aired one time, was taken off of SNL. It's not any big deal, but it's just interesting.
Schoolroom Rockies back on the block with conspiracy theory rock.
Some of you might remember
It's
this.
a media-opoly. The whole media is controlled by a few corporations thanks to deregulation by the FCC.
You mean Disney, Fox, Westinghouse, and good old GE?
They own networks from CBS to CNBC.
They can use them to say whatever they please and put down the opinions of anyone who disagrees.
Or stuff about PCBs.
What are PCBs?
They come from electric power plants built by Westinghouse and GE.
They can give you lots of cancer that can hurt your body.
But on network TV, you rarely hear anything bad about the nuclear industry.
Like when Westinghouse was sued for fraud.
Which time?
GE made defective bolts, it was an unreported crime. Or when it was boycotted for operating nuclear bomb plants just to squeeze a dime.
That's a footnote, by the way.
A footnote protects you from folks who doubt what you say. Now maybe the voices in my head will go away.
But the big shots don't care. They're all sitting pretty thanks to corporate welfare.
What's that now?
They get billions in subsidies from the government. It's supposed to create jobs, but that's not how it's spent. They use tax and soft money to support congressmen who will vote for weapons programs again and again and let them dump toxic waste where the young ones play.
And GE made the bullets that shot JFK.
You contribute to this chain every time you buy a product sponsored on this show.
That's what NBC doesn't want you to know. Now the next time.
Please stand by. This is technical difficulty. Supposedly, so if you see a place
know it's all part of Gene's big lie.
Why did you ignore McDonald's away?
Because he made too many jokes about OJ.
But Lord Michael's overruled.
Now don't be fooled. He and Mary went to the same high school.
So yeah, that aired in sometime in the 90s, but it's just funny how true it still is today. Obviously, the theme of that is how sorry about the dog. How America is run by corporatism. Anyways, it's hump day. We make some money today. The J. Powell speech is at 9:30. It's not really a speech. It's with him, Christina Lagarde, who's the head of the European Central Bank, and I forget the person's name. The head of the Bank of England, I believe, will also be there, and that's in Portugal. And London just raised their, they just went with back-to-back rate hikes, which has got those markets a little bit rattled. We'll see what J. Powell has to say. Now they're saying another hike in July is just about priced in. So we got that going on. Mm-hmm. Flights have been a disaster. Let's check some of the airlines, because they I forget the number of flights they said the last 2 days too. So not even a holiday weekend or anything like that. Between Monday and Tuesday, some ridiculous amount of flights canceled and rerouted and stuff. And I'm not exactly sure what's going on. Now, that is kind of typical at the end of the month, because pilots can only put in so many hours. So they are blaming it on staff shortages, which would make sense. It's based on a monthly basis, so you can only fly X amount of hours. By the end of this month, you have a lot of the pilots have reached that maximum. What's up, Jerome? Do you think do you expect any action out of this meeting today with Powell and Lagarde, or just a bunch of lip service? Probably just a bunch of lip service. But I think you couple that with whatever Biden's going to talk about. I mean, the beauty of it is the media won't allow anything stupid that he says to get out. So if he does come up there and say something like he's been giving away state secrets or something like that, they're just going to overlook it. When it comes to the economy, I'm sure he will. I'm sure he'll be addressing the Ukraine issue. I mean, most of our economy is going there right now. But just in case you guys forgot what we're fighting for, I'll let you know real quick.
The President has said many times we're focused on what we can do to support Ukraine's effort to fight for their democracy.
Democracy must prevail. The Ukrainian people are fighting the fight for their democracy, and in doing so, for ours as well.
Remember that, guys.
Helping Ukraine win this fight for
it's not just a fight for them;
freedom.
it's a fight.
And of
for
course,
our
Ukrainian
democracy.
President Zelensky understands that what's at stake in Ukraine is bigger than just his nation. It is literally a battle for freedom and democracy themselves.
They are showing the world what an existential fight for democracy looks like.
President Zelensky and the Ukrainians have changed the course of history for the better, and we unequivocally are with the Ukrainian people in their fight to remain.
I'd love to hear these people talk about America as proudly as they talk about Ukraine, but this is just a quick example of what a democracy looks like, though. Here's President Zelensky, and both of these clips are from Tucker last night on Twitter.
Чи будуть в Україні наступного року вибори?
Це ж питання глобальне. І якщо ми
If
переможемо,
we
то
win, there will
будуть,
be an election.
значить, не буде військового часу,
If we
не
win, there will
буде
be an
війни.
election. So if
А
they
вибори повинні
lose,
проходити
no election.
у
No election.
час,
That's
мирний
democracy,
час, коли
folks.
немає війни. Згідно
That's democracy. That's where your tax dollars are going. Remember that. And the funny thing is that man, I don't have the clip, but so they're introducing a bipartisan bill in the Senate. Basically, so watch for this to happen, guys. If you've heard the rumors of the nuclear power plant, that Russia's going to do something to it. So they're trying to pass this, what is it, Article 5? Some of you guys might know. It's basically what it's saying, and it's Lindsey Graham and a Democrat that are co-sponsoring it. So it's a bipartisan thing. But it basically says if Russia, and I'll get the clip tonight. I'll play it tomorrow because it's kind of creepy the way that the Democrat, well, Lindsey Graham's a piece of shit, allegedly, and the way that the other guy talks about it, he sounds like a dude from Tropic Thunder, Tom Cruise, talking about how if this happens, we're going to eviscerate Russia and this, that, and the other thing. So they're freaking warmongers. These people are such blood and profit thirsty warmongers. There's no nice way to call it. This isn't about the Ukrainian people. This isn't about the Russian people. This is about power and money, and we have psychopaths who are making these decisions. It's not just Biden, though. That's the thing. It's easy to point the finger at him. It's easy to get distracted. And you know what? For all we know, all those gaffes and shit could be by design. Just like all of Trump's kind of off the cuff stuff, that may have been by design too, just to keep us distracted. Keep the that's, I think people underestimate that goal of just keeping the sheep occupied, keeping us at bay, keeping us away from the real issues. Maybe not. So Jerome Corp, you think it's going to be a lot just lip service today? Yeah. I wonder if they're going to address where the funding. So they're already starting, Germ Corp, if you've seen, they're already starting to kind of divvy up the post-war Ukraine as far as who's going to get what, where the money's going to go. So $400 billion in funding is what they're asking for, and that's kind of what they've guaranteed already. They're using the rebuilding of Berlin after World War II as a benchmark for kind of rebuilding Ukraine, build back better, you know. Hey, Mr. Business, good to see you, buddy. Hope you're doing well, my man. I know you've been busy at the workplace, but hope everything is good. Hope everything is well. Yes, make it a great day. It's hump day. It's got to be a great day. The sun is not shining, the birds are not chirping, but hey, it's got to be a good day. Yeah, it definitely does, Germ. It definitely does. And so, okay, just bring it back to the market a little bit. So we were talking about these semiconductors and how they're how Nvidia down almost 3.5% now. So how they're dropping on these fears that Biden's going to slap a ban on the selling of AI chips, some AI chips, maybe not all of them. My question is, okay, does China just sit back and say, well, we can't buy these AI chips, guys. I guess AI is out of the question for us. Or do they either infiltrate a company and get that IP? And I'm talking about this like China isn't developing some of their own stuff or stealing some of the other stuff. So who can? There's got to be two sides to the coin. If companies like Nvidia and AMD's down over 3% now too. If companies like that are going to be hurt by this ban, there has to be companies that are gonna prosper. Now, what I don't know if these companies are even tradable. I don't know if we can find that out, but definitely something to look into. And what's the is that a national security? Is that them trying to slow down China's innovation? What's the end game from that? I mean, on paper, it seems like if you're preventing a U.S. company from selling something to China, it seems like you're hurting us more than you're hurting them. I could be wrong on that. We shall see. Coming up on the 8 o'clock hour, how these futures looking? We got the Dow futures in the green. NASDAQ and S&P were both slightly red earlier. NASDAQ, by the way, biggest first half of the year, unless it somehow plummets in the next couple of days terribly. Biggest first half of the year since 1983 for the NASDAQ. Yeah, you have to think there's going to be IP theft, but just stopping it, does that stop the IP theft? I mean, understandably, I guess moving into the future, but if they're buying a product that they were going to steal, yeah, I don't know. I'm sure you're probably right on that, Germ Corp, and it probably is advantageous to some degree. But my question, it's one thing to bootleg purses and CDs and football jerseys and stuff like that. Is it as easy for them to steal IP of something that technical and then have the ability to reproduce it? I guess if you look long term at a slow theft, you know what I mean? Well, they somewhat, I guess, depending on what your definition of trouble is, GTA. I don't think like China as a country gets in trouble. I know every single day shipments from China of bootleg shit get seized and stuff like that, But yeah, I don't. Who's gonna stop them? And now with AI, so I'll bring this clip tomorrow too because it's terrifying. You guys know, well, maybe you don't know. I gripe about the guy a lot, Dr. Scott Gottlieb. I don't even want to call him a doctor, but he was the head of the FDA. Now he's on the board of Pfizer. And he was on CNBC this morning talking about AI powered death panels. in the medical industry. And it's terrifying because Teen Wolf's dad, the other guy on CNBC, the guy that I like, he pushed back on him as much as he can. Every other ad sponsored by Pfizer and Big Pharma on CNBC, so they can't push back too much. But this guy laughed about it being AI controlled, and the way AI is going to look at it is this life-saving drug costs too much money, so you die. And obviously I'm oversimplifying it, but it's a very slippery slope. Very, very slippery. Okay, Jerome, I'm following. So Jerome had a friend in Hong Kong who used to work on the IP stuff, would work with Hong Kong and China police. There was one factory that kept ripping off a UK shoe manufacturer. Stay tuned for the thrilling conclusion. Yeah, but you know what's weird, and this is who was the guy's name? I listened to a very casual debate on this. It wasn't like a argumental debate. It was just kind of two. I guess you would call them global economical financial experts, and both played up a different angle. And one played the angle that you're talking about, GTA, with China being a sleeping giant, with their Navy expansion. The other one kind of played an anti-Western, more of a cultural type thing, in the sense of they don't look at war as profitability the way that we do. They don't look at conflict as, and it's not that because they're better or they're not willing to sacrifice lives. It's that they just want money and expansion. So the Belt and Road Project, you know what I mean, which was basically them going into poorer countries and loaning them money, essentially that the countries couldn't pay back for control of the infrastructure. Now, I'm not saying that they're not willing to go to war, but I think the way, and I'm not saying that we look at it in a good way and they look at it in a bad way. I think just and I hate to, they just look at it differently. They look at it like you look at what's happened. We do things by force. We go into places, we send the CIA in there, have them create an uprising to try to get the public on our side, just like we did in Libya. And then we go in with force and we destroy them. Now, China destroys them in a different way. So I don't know. Okay, so back to the UK shoe factory. So it kept happening even after closing the factory, and in the end, the IP guy said that the UK manufacturer should outsource the work to China. They did, as they'd never stop it. So do you think that was an underlying reason for the huge expansion into outsourcing? Was that it was kind of, well, it's going to happen either way. You know what I mean? If we, at least if we pay him to do it, we, I guess lesser of two evils. I don't know if they're 4 feet tall. They might be a little bigger than that over there. All right, 807. I think the Dow went red now too. All three in the red. What else we got moving here? Nvidia, really the big one, down 3.5%. What's down in the Dow? You got Boeing up 1.25%. They had some good news earlier, Boeing. Okay, so speaking of China, the Boeing news was Boeing says about 90% of its China 737 MAX fleet have resumed commercial operation. They grounded the entire fleet after an air crash of one 737 MAX jet operated by Ethiopian Airlines in March 2019. So they grounded 96 jets that they had at that time, and 90% of those are back up and running. Wow, that's crazy, Jerome. Went to the October Canton Trade Fair, went to see an Australian motorcycle manufacturer. There were already copies of their bikes being shown on other stands. Well, and you got to think that with AI being what it is, you know what I mean? With you have to think that the ability to replicate stuff is going to get so much easier with AI. Because all this generative learning and stuff, that's what it is. It's not AI that's thinking for itself when it comes to Chat GPT and stuff like that. It's AI that just has all this information fed to it. So, brain a break. Good morning, good morning. I hope you got some sunshine near you. We got some straight rain and gloom out there today. But it's supposed to clear up in the afternoon. It better, because I got a baseball game to be at tonight. They probably already have them, GTA, I would think. I would think there has to be some kind of what would the function of AI be to the printer? Like, what would make it different than just a regular printer? Because they do have that one dope printer now that's you can pretty much print from anywhere, from any device. It's inkless. I don't know what the hell it prints with, but it doesn't have ink. Oh, you got all that sunshine? I got sunshine in my pocket. Okay. So you're talking like AI 3D printers. Uh, yeah. I mean, I would have to think that would just be upgrades to the existing 3D printers that they have. Will be some kind of AI based function. I mean, because essentially what you have with this AI that is being talked about the most, with like Chat GPT, that kind of stuff. Essentially, you're just you're 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 cramming the ability to go on Google and research and find out how to do or how to make or the answer or whatever to anything just a million times faster. So I don't think it changes things much. It just speeds it up. Mm. Okay, interesting one is that the China yuan is pegged to the US dollar. This makes them super competitive, but China has to buy US bonds in order to keep the peg. If they floated the currency, they would lose competitiveness. Okay, so let me try to wrap my head around that for a minute. And how it's interesting. So, do you think that we see a depegging at some point, or do you think only time will tell on that, or do you think that? Oh, let me phrase that a little bit better. Do you think that there'll be a sign um, before that is to happen? So, for example, if we see China halting buying those bonds, could that be a sign that we're going to see a depegging? But the question with a printer, like with a 3D printer, though, GTA, you would still need the materials. That would be the tricky part. That's like the old like the AI technology is probably going to be made available to everybody, but especially in the physical world, the stuff to take advantage of it, you'll probably see the price of whatever kind of metals or plastics are used in 3D printing. You'll probably see those prices go through the roof. You know what I mean? I don't know what goes into 3D printing right now. I've never used one. But I would have to think with AI that, like I said, it'll be a leap forward as far as the ease of using it. It's like that old Chris Rock theory to stop gun violence, to just start charging $1,000 a bullet. And okay, so are you following what's going on with BRICS and the amount of countries that keep signing up? This is like the one WrestleMania when they had like teams, like they split it, and maybe it was SummerSlam where they split up the WWF strictly into heels and baby faces, and the whole event was like one team versus the other one. That's kind of what's lining up here with BRICS and the G7. Yeah, I don't think that company is going to be around much longer. I think they're going to probably have some lawsuits coming. So for the short to medium term, 3 to 5 years, China will still buy U.S. bonds to keep the yuan competitive. When the time comes, the sale of the bonds will be used as a blackmail tool. Dun dun dun. You know what I tell them when the blackmail comes in? I tell them you can have a piece of these nuts. Randy, what's up, Mr. Stagner? Good to see you, buddy. It's 8:16. The question today is Bidenomics working? President to deliver major economic speech. I love how they haven't. I've seen 15 different headlines on this today, and they just it's like the Christmas Story award when he won a major award. They just keep saying Biden to deliver a major speech. Yeah, I'll tell you what. Some of the memes, I'm ashamed to say it, but some of those submarine memes, oh man, they were good. They were good. All right, so one more theory, Jerm, and I'll stop putting you on the spot. So, is there any chance that the U.S. would act preemptively and do it themselves in an attempt to screw China? And how will the rollout of Fed Pay or Pay Fed Now, how will that affect it? Will that immediately be like a digital currency, or will it still be just the US dollar? Because right now that's just the way to the Fed Now is just the process of transferring funds much quicker and cheaper, right? And then eventually it'll turn into probably its own currency, you have to think, or its own replacement of the US dollar, or will the US dollar just flow through it? And that's also what I'm looking for out of this Powell Lagarde meeting today, is some sort of updates or clues on this digital currency. Genetic technologies. GENE up 17.5%. Not seeing news on that. I'll keep an eye on that, see if anything comes out of it. That space you were talking about, Bree, up 1.5% today. So space took this dive that I missed out on. I called it and I didn't play it. And I think that was probably an overreaction now that the full story came out about the submarine. I think it kind of probably eased investors' minds on space. Buckle up, Germ Corp. That's what I say. Buckle up and, don't have all your eggs in one basket right now, I guess. That's the big thing. We'll see where it goes. So that starts at 9:30. Do we have any data coming out today? I don't think so. Where's my man Arctic Fox? His Carnival made a hell of a recovery yesterday. CCL finished up almost 9%. Now that was an overreaction. The day before, when it overreacted to good earnings, good bookings. So just kind of crazy, and right back to just under where it was before the earnings came out. Oh yeah, their first commercial space launch happens tomorrow. Yeah. We got a time on that, Bree? We could probably try to watch it, like the last infomercial. Now they're just doing the same thing that they did at the last one, where they go up into orbit, fly around for a minute, act like astronauts. Like, they don't really go into space, right? They just go up to where they can float around and play astronaut for a while. And do they actually travel with it, like, or do they just go up and come straight back down? Or do they like launch in Florida and fly to California in, half hour or whatever? Because that's, I think that's where the money's at. That's where the commercialization is at. I mean, rich people will pay money to do stuff that only they can do, only to an extent. There's only enough billionaires to pay to just play around. But if you've got these things that kind of like the what was the one in England, the Concorde, is that what it's called? I've got some astronaut-like qualities as well, Randy. I've been told. Maybe tomorrow we'll dress up like an astronaut in honor of the people going to space. We'll pretend like we're with them. How's that sound? Give me a 1 in the chat if you think we should dress up like astronauts tomorrow. I'm just trying to support the team, man. Trying to support the local cause. Oh, and real quick, I'm sure she's probably not out here with us today, but big special shout out to Ms. Jane Hammond. You all know her. We know her. We love her. Her sister going through some surgery today to hopefully get her vision back. So much thoughts and prayers are with her and her family. And it's a 2-day event. So hopefully everything goes smooth and they can get on to the recovery process. I can't wait to hopefully see her seeing, it's going to be amazing. All right. Well, I guess two will do it. Just for you, Ace, Andy. We'll make it happen. You're horrible, GTA. You are horrible. No, I don't. Branson's not really hated. Strange. Have you guys seen the new fake real chicken? So 2 companies got not FDA, USDA approval. So what they're doing is they're making this chicken with they take the cells of a chicken and do some shit with it, but they got some high-end chef. You guys would probably know him if I knew his name. Spanish gentleman, I believe. They got a high-end chef. He's the guy that if you remember when Bezos was handing out money, Bezos gave him and Van Jones, is that his name? Gave him $100 million to spend on whatever he wanted. This guy's a chef, and he's fully behind this fake chicken. Looks awful. Awful. Because they're not telling you what they have to do with these cells in order to produce. It's not like you just take cells and put it over here and a chicken breast comes out. Oh, your Duck Dodgers uniform tomorrow. Wow. Trying to outdo me, Randy? I'm actually going to do a little mascot work tonight myself, Randy. Hopefully it's a blowout and they don't need my my encouragement, but when a team gets down, sometimes you got to throw the mascot costume on, get out there, get the crowd going. They can make energy from chicken feed. So, like, do you, yeah, that's what I was going to say, that high-speed chicken feed. So, do you mean, like, the process of the chickens eating, like, that generates energy? When chickens go up and start in it? Because maybe you could do that. I did see, I think it's overseas, but a nightclub that when you dance, your body generates heat. And this nightclub, they've been working on it for like 3 years, and it takes all the heat from people dancing, filters it into this thing, does some shit with it, and then uses that energy to heat and cool the place. It's pretty wild. I'll give you a bigger challenge, GTA. Find me a crackhead who doesn't talk to ghosts. You want to impress me? I think they all do. I think they all do. Oh, you know what? Almost forgot. Don't want to let it go. Gotta do today's version of So, on this day in history, one Elon Musk was born. Also, the saxophone was patented by Adolphe Sax, who at the age of 16 was already an accomplished Belgian instrument maker, dreaming of creating a group of instruments. Labor Day also became an official holiday in 1984. 1919, the Treaty of Versailles was signed. And in 2012, the U.S. Supreme Court upheld Obamacare. Dun, dun, dun. Yeah, not a great day in history. But happy birthday, Mr. Musk. May your whatever. Elon didn't look too bad. I think he might be able to give Zuckerberg a run for his money. That Lex Friedman been rolling around with both of them the last couple days, and this, I don't know. This jujitsu that these billionaires do, it ain't like watching UFC. It's like watching people trying to mime real fighting in slow motion. A lot of hugging, a lot of like light petting. Very strange. Labor Day started in 1894. Sorry, Sabrina. 1894. 1894. 1894. Not even close. I don't know. Zuckerberg looks like he would do something like he would do something greasy. He looks like he might do like flick Elon's nuts or something. Like do something. I don't know. And I don't know how they win, because like when I was watching them, they were tapping out every like. I kind of watched clips of both of Zuckerberg with what's his name, and then Elon with him. They just roll around on top of each other, and as soon as like they let each other get them into moves, and then they tap out. I've never taken jujitsu. I took karate, so I don't know. Elon's only 180 pounds. How is that? Because he's not slim. I weigh more than that, and I'm only like 5'9". I'm 5'9", 185 of pure muscle. GTA, pure muscle. Just saying. So I'd say if Elon's 6'2", with that tummy that I've seen, he's got to be at least 210, 215. Heist going on in the chat, guys. Get in on that. Oh, GTA, I'd go full blown Three Stooges on them boys. Remember the episodes of Three Stooges where Mo would cut Curly and Larry? The whole episode? That would be me. Just nonstop. Bing, boing, son of a. I oughta. All that stuff. Because my goal wouldn't be to beat him. My goal would be to, I'm going to embarrass you. You got to embarrass them. You got that opportunity. You don't just beat them. That's how you embarrass them. Michael J. Aloha. Good to see you. Good to see you. Happy hump day. May your humps be true and Bree, I put my money on you over Zuckerberg or Elon every day. Any day of the week. I would definitely pay to see you fight Zuckerberg. See, that's the thing. They don't really want to fight, I don't think. I think they just want to roll around and play jujitsu. Whatever. 8:35. We got an hour before J Powell, and still not sure what time this Biden speech is going to be this morning. They said this morning, so I'm not sure. I love that bio, Nunya. 5'9", 155 pounds of twisted steel and sex appeal. All right, 8:36. Give me a quick 2 minutes here, guys, to go grab a cup of coffee, check on the Mutleys. Still getting used to this time difference, but give me just a few minutes here, and I will be right back. No, Bree, it sounds sweaty, and now that I've said it out loud, I can almost smell it and taste it, and it's awful. Be right back, guys.
Oh, yeah?
All right. Welcome back. Welcome back. It is 17 minutes before 9. We should be having the local degenerate joining us here shortly, hopefully. It's my joint right here. All right. How's everybody feeling? Happy hump day. Let's go. Futures aren't ready to go, but we can turn that around. We can turn that around. No problem. No problem. I'm going to dial all three indices, looking at a red open now, with the NASDAQ leading the charge. But again, microchips are bringing everything down. AMD down 3%, NVIDIA down 3.25% still, Broadcom, NXP, Qualcomm all down over 1%, Texas Instruments down 1%. So we will look for, I don't know if they'll touch on that in Biden's economic speech. I doubt it. I would think that it should be positive stuff. Maybe that will be looked at. Maybe that'll be a talking point, taking a stance against China. We shall see. Micron only down 1% off those earnings. Let me see. Oh, their earnings come in today. I'm sorry. Okay, so their earnings come in today. Conference call at 5:30. I don't know why I thought they came out. So this is how they're saying it. The world's four most powerful central bankers are set to give a collective talk on Wednesday on their final policy push to rein in inflation. So they're going to pat themselves on the back. They're going to say how great they've done and how, how inflation's come down, which it has. It's still nowhere near the target. And they can probably ignore the repercussions of it, but they can, there'll be a lot of that going on. Oh, yes, the U.S. bank stress test results are supposed to get released today, although I heard maybe not till Friday. U.S. trade balance in goods, 97.1 billion. Hey, Miss Jane Hammond. We were just talking about you a minute ago. Good to see you. Good to see you. Everybody was throwing out. Everybody was throwing out those prayers and all that good stuff. So we were letting you know. Bree, it's on my soundboard. I'll see if I can get one and put it in restream for us though. This one here.
Oh, yeah.
12 hours, man. It's going to be a long day, but well worth it. And try to keep yourself busy, Jane. Try to I mean, this is it's kind of strange. Like, not that it's not stressful, because I can't imagine how stressful it is. It's a lot of times in these situations, you know what I mean, you're more worried than anything, which I'm sure you're worried, but it's there's not usually such a joyous outcome to come from anything in the hospital. Sure, you know, my ma's gone through surgery that's potentially saved her life, things like that, but she didn't come out of it and have the ability to do something she couldn't do before. She just had the ability to survive. This is an event that's going to have a far better outcome. So I'm sure you're overcome with probably every emotion possible right now, Jane. I'm sure there's excitement, anxiety, nervousness, but yeah, it's. I mean, I got anxiety about it, so I can only imagine what you're feeling. Yeah, where is that Enzo? Someone better wake him up. Wake up, Buttercup. Where you at? And then after the bell, we get Micron earnings, General Mills earnings, and then again, it's up to you guys. I can absolutely be Jerome Powell on at 9:30 if you guys want to watch that. Let me know in the chat. Yeah, that's kind of what I was trying to say, Jane, and I was trying to think of a nice, like, a way that I didn't come off like an asshole, like, and I didn't want to say, like, well, what's the word, like, I didn't, you know what I mean? I didn't want to put it in that context, but it's like you said, it would be like a miracle, and hey, if only you believed in miracles, like I believe in miracles, we get by. Everything's gonna go great, Jane. You got a lot of great people in here pulling for you, and yeah, positive thoughts, they do matter. They do make a difference, and we're all sending them your way today and tomorrow. Advanced wholesale inventories May down negative 0.1%, and retail inventories down or up 0.2%. Okay. So what does that tell us? I'm trying to compute all that. You did, Randy. I was actually summoning you, my friend. Just making sure it still worked. Still, you still go by the same calling card. All right, we got 8 minutes before the top of the hour. What you guys looking at today? What you guys feeling? Obviously, this isn't as big as like an FOMC day, but I think the two speeches combined, I think with the Fed going on, and don't forget we get another Fed speech tomorrow with the Bank of Spain. I think tomorrow's is in Spain, maybe. But with the combination of that and with Biden talking, because we may don't forget, with Biden, with this being kind of an election thing too, this could affect kind of a future proposition. So, for example, when he first announced the infrastructure bill, well before it passed, well before anything like that, we seen a lot of infrastructure plays immediately go up just on the announcement of that. Again, I'm not saying that he's going to announce something too much in the future into maybe his next presidency, but there's a potential that we see kind of some of what he's running on today, which could be investments in, anything. And we may see some of these chips plays turn around because we may see an even bigger investment being made into making and keeping these chips here, keeping them away from China. You just never know. You never know. EVs could be another thing. He could be announcing some kind of subsidy for them, because you got to remember too, with presidential candidacies, sure, they address the American people as individuals, but they're also, any candidate has to speak to big unions. You know what I mean? So if potentially something that could help the auto workers union, something that could help the teachers, anything that we may be able to profit off of in the short term, that he's putting out there as maybe, campaign promises. Well, Michael J, it's Elon's birthday today, so maybe Tesla's got to make a move, right? Well, I feel like you're probably right, GTA, because there's a lot of these companies that are in a really bad spot now because they kind of went one way with advertising, like Bud Light did, then pulled it back like Target did, and now you've pissed off both sides of the aisle, because nothing's going to be enough for the one side, right? If you're against that stuff, whatever, uh, it's not like when it's, you're not going to get people to go back to it, and now you've alienated the people that you were originally catering to. And I told you guys my fears with that, with AI a while ago, is that, okay, let's just hypothetically throw this out here. Think of any other major, say, beer brand, or any brand you want to make up in this fictional scenario, but let's just say an AI created image of that with somebody like a Dylan Mulvaney or something came out and was posted online and seen by millions of people. A complete fake AI generated image of a corporation supporting a certain cause, whatever it may be. Now you put that corporation in the position to have to commit one way or another. And it's a damned if you do, damned if you don't, heads they win, tails you lose situation. And that's frightening. That's frightening with the way that information spreads. And I'm not saying that happened to any of these companies. These companies obviously chose to, they thought they were doing whatever, which you're absolute right. But you have like Starbucks, you have Starbucks employees going on strike. over a policy that wasn't aimed at a specific thing, rather a policy that's aimed at everything. We don't get involved in anything. Okay? We're not saying that you're not important or these issues aren't important. We just don't take sides. We're here to sell coffee, make make all customers feel comfortable, and that's it. You don't need to alienate one person. You don't need to alienate some people to make some other people feel comfortable. And that was kind of their policy. They're getting attacked for that now. Lord Billy Ray Mullentine has entered the chat. That's true. That's true. You can't trust any videos or images anymore. Yeah. Arctic Fox, what's up, brother? Good morning. Good morning. How about that Carnival Cruise Lines recovery, Arctic? Back up near that $16 mark, $15.90. Look at that yesterday. Beautiful, beautiful, beautiful. Yeah, but it's, and I mean, it's the other thing is context. The other thing is context. If any of you guys are on Twitter, follow the stuff, maybe you've seen the Roseanne Barr clip that came out that everybody attacked yesterday and posted a clip of it completely out of context. Completely out of context. She was doing a bit where she was doing a bit on what corporate media does, how they silence certain things, and other things aren't allowed. And she was basically saying, like, it's crazy that you can't question certain legitimate sciences, things like that, but you could come out and say this never happened and YouTube will let your video stay up. And you guys know what event I'm talking about, a horrible event, millions of people, that one. And they took the little clip of what she said and people start, and it's like, so context matters, and that's always been a trick of the media, to take things out of context. Well, and you're right too, Billy, because once the public gets duped really good one time with a deep fake and it's something of importance, then all trust will be lost. It's a very, very slippery slope. Although I have to imagine, and you would know more than me with being in tech like that, I would have to imagine that there's just as much innovation going on in the technology to detect the technology. For example, programs that detect that something's been tampered with, that it's not an original video, that it's not an original photo, That was billion. That was billion, Acely. We made a $6 billion accounting error. There you go. All right. $9:01. Where's the degenerate? Degenerate, where are you? I don't think we're gonna see that anymore. GTA. I think I think the minute BlackRock got as involved as they are, I think the accusations there'll be because now you've seen it flip back to regular currency. So what they're doing now, GTA, and we played that little clip with the lady that J Powell was about to meet with yesterday, talking about the digital currency and talking about how even even allowing people the freedom of spending $300 without being tracked is too much for them to handle because people use money for terrorist attacks. So now I think that they're ready to initiate the switch to the digital currency GTA. Now they have to go back and attack fiat money, but they needed to let BlackRock and company position themselves before they could start bringing Bitcoin back up. You know what I mean? Oh wow. All right. I like it, Arctic. I like it. Now hopefully you made out on that. Well, words get normalized over time. Words get normalized over time, and the same way that Trump kind of normalized like some rough speak. Biden has normalized calling supporters of the opposite party terrorists. Like it's not a farce. Hey, Doors are us. Good morning. Good morning. Good morning. How we doing? How are things down south? Yeah, I really expected her, and it's probably too late now. I thought that we would see her running in 2024, Billy. I don't see it happening now, but I thought we would. I think next up for this election, if they don't, if for some reason Biden backs out or something, I think they probably go with Kamala, most likely. Not bad, not bad. Well, that's good to hear. Doors, good to hear. Good to hear. What is going on? All right, guys, give me a few minutes to try to get a hold of Enzo. I hate to disappoint you guys, but that was kind of the reason why I started coming on at 7 was so I could free up some time. But I will hang with you for a while as long as I can. Let me try to get him though. And then 9:30, like I said, let me know if you guys want to watch that J Powell stuff. It's not if you remember, we've watched these before. I think there's usually a moderator. It's not J Powell up at a podium giving a speech. It'll be, more of a Maury Povich type place. All right, guys, give me just a few minutes here. All right, guys, welcome back. Jane Hammond, thank you so much for that big time super chat. Much appreciated. All right, we got 18 minutes. Sorry, guys. I'll hang out till 9:30. I'll throw that J Powell stuff on at 9:30. I've got a lot to do today. I gotta cook like shit ton of food by tonight's baseball game. Trust me, I would love to just hang out with you guys all day, but gotta pay the bills. But we will keep it rock and rolling for the next 20 minutes. We'll get ready and see where this day takes us. Yeah, I'm also a cook too, on top of whatever other jobs I do. I wear many hats. Arctic Fox coming in hot with that super chat. My man, appreciate you, Arctic. You the man, brother. Awesome. Yeah, you gotta keep those buckaroos coming in. That's all. You gotta make sacrifices. Billy Ray, you know what it's all about. You've been on that grind like I never seen. And just keep at it, brother. Keep at it. I try to like and share all your tweets. I even sometimes try to understand them. Most of the time, they don't make no sense. No sense. Not because you don't make sense. Let me reiterate that, because it's out of my technological realm of expertise. So futures still down. Nothing too drastic. The Nasdaq might be down almost 0.5%. S&P down about 0.25%. Dow been going back and forth, red and green. And I still haven't seen a time on the Biden talk. So try to bring that to. And really only because it's a direct talk on the economy and the state of the economy and the economy moving forward. If it was any other bullshit, regardless of who was up there, we wouldn't be even talking about it. But happy hump day!
Oh,
Let's go. It's got to be a good day. Darkest before the dawn. That's what I'm talking about. Hey, tough times make tough people. Tough times make tough people. You know what? Looking back, and even in my day-to-day life now, I wouldn't have it any other way. Don't get me wrong. But yeah, I'm grateful for having been through some of the tough times that I've been through, because you know what, you really, and it's funny, Billy Ray, I ran into a friend I haven't seen in 15 years yesterday, and we shot the shit for 45 minutes, and it was all about growing up and perspective on life, and this dude was a good dude, but always kind of making money in ways that you probably shouldn't. But to see him, I seen him working a real job, something that he loved, something that he had passion about. He was happy. He was talking about his daughter, and we were both talking about how kids changed our life. But not only that, just when you start to realize what's important in life, shit like that. It was cool. But those struggles, they make you who you are, and it just makes everything easier, and you learn from them, you move on, but you never forget them, Non-refundable. What's up, brother? Good morning. Yeah, but you know what? Like, especially for me now, Billy, like, I'm at a place in my life where, don't get me wrong, I spoil my son. I make sure my bills are paid. I try to save what I can. But, um, I just, it's crazy how you can cut stuff out of your life, stuff that you thought, as far as expenses and stuff like that, so stuff that you thought that was vital, that you cut out, and you see, like, man, I can't believe how much I used to waste on this, waste on that. Like, for a while, like, I would buy like $10 in scratch offs every day. This is going back to my early 20s. But even looking back on that, like, because I did cable and I did it with another guy, and we had a half-hour drive every day to work, and he would drive, and I didn't have shit to do for a half hour, so I would buy $10 worth of scratch offs every single day. I would buy 5 cash words and never win shit. But just little things like that, looking back on it's like, man, how stupid was I? That's all. I love that. Um, being a bum with limited income is no fun. Now, a bum without money worries remains the goal. I love it. I love it. And that's the thing. And that's, I'll never be rich, Billy Ray. I'll never be rich because the more I have, the more I want to give, the more I want to help people. And I'm not just saying that to pat myself on the back or anything. I'm not any that's what makes me happy. People say it's selfless. I say it's selfish. I say it's selfish because you know what? I can go do something, spend money on myself, and it's probably not going to make me happy or make me even smile. If I can take that money and or time, effort, not giving isn't just about money. Taking that time, that effort to do something for somebody who not only needs it but is going to appreciate it and could be a bigger catalyst to something bigger in their lives. I go with the guaranteed thing, you know. And again, that all goes to my ma. I would be a complete asshole if it wasn't for her. I learned from her over the years. I took examples from her. She's always been, the person that would just help somebody else before helping themselves. She's an amazing woman, and hopefully I can continue to make her proud and carry on her legacy a little bit every day. Yeah, CVS, you know how it is. You know how it is. Like, it's crazy too, because if I'm buying something for myself, it's like trying to pry money out of, like I look forever. I try to find the best deal possible. I try to, when it's Nikki, it's different. Billy, this is what makes you such an amazing dude. You know, I love you, brother. I love you, and you are up there with the best, and you probably are through this whole trading thing. You're probably the one that I've known the longest, the one that we first really got into conversations about. Like it was, and I still remember it was cigarettes and weed, trying to correlate will big tobacco get involved, this and that, and yeah, just awesome, man. Really appreciate you. And it's like you said, Billy, it's darkest before dawn, baby. And you're on to bigger things. You're on to big things, and mainly because you've put in the effort. Nothing's gonna be handed to you. You know, love it, love it, love it, love it. Oh, CBS, you doing some ESPN on us? Liking the stream with your mind? Oh, this journey's just beginning. It's just getting started, Billy. It's just getting started, baby. Yeah, this is long term. This is long term. All right, 8 minutes. Give me a second to try to find this Fed talk because I got major cutlets to slice down there. Mm-mm-mm. Coming live from Portugal. Macroeconomic stabilization in a volatile inflation environment is what this is being dubbed. Aloha. And right back to the grind. That's the way it's got to be. Hey, it's a everyday thing for me, Billy Ray. It don't stop. I've been up since 3:45. Started watching the international markets and all that stuff, and then I got a baseball game that starts at 6 that I'm cooking for both teams and the concession stands and all that. So that'll go till 9. Clean up all that stuff. Get home about 10. Get up tomorrow and do it all over again. Thank you, Bree. My dog's down there blowing up. Huh. It shows you have 96 at 33, but when you try to sell, it says it's a short position. Interesting, Arctic. Yeah, that's pretty much an Enzo button, basically. I also got the other Enzo button.
I'm gonna be honest with you. I'm kind of retarded.
So that should start right about the open. We will see. We got 4 minutes. Oh, Jane, back to making Streamlabs her biatch. I love it. Getting them buckets. Jane be telling Streamlabs to go ahead and hold on to
These nuts.
3 minutes, guys. 3 minutes. Arctic, yeah. Man, that doesn't. I don't understand how it would have became a short position. Very strange. All right, 3 minutes till the open. Future still looking like we're going to open up red. Shouldn't be anything too drastic at the open. Then we will be keeping an eye on J Powell, see what he has to say. Again, this isn't an FOMC. There's no rate hike or anything like that he'll be talking about. So we may not see any kind of immediate reaction. But like I said, the combination of what they any clues they may give as far as the globalization when it comes to the financial system. Obviously, there's a lot more at play now with what's going on with Russia and all that stuff. I think Mr. Beast make a Feastable, I think, called D's Nuts. I'm pretty sure. Something like that. You drink too much of that though, mess around and catch the
Diabetes.
Gotta stay away from that, brother. Yeah, that's NASDAQ, 29.5% up year to date. So again, on pace for the biggest first half of the year since 1983. So you got to ask yourself, does the economy back that? You know, typically when you see things do have monumental upticks, I don't know, is our economy where it should be for that kind of movement, or are we in store for a pullback like none other? I tend to think second half of the year, you have to see the NASDAQ pulling back at least half of that. At least half of that. Oh, made some s'mores with them. Nice. Fed Speak Algorithm Trading Machine. You know it. Let's go, Germ Corp. All right, we are off and running. Let me change this. All right, just give me 1 second, guys. Sorry, this is set up for pre-market, and I'm trying to just make it work on the fly here. All right, so we got the NASDAQ opening down just about 1/3%, the S&P down about 1/4%, Dow Jones down 0.21%. They have not started over there yet. Tesla falling here at the open, back under 250, 249.46 on Tesla. Google down almost 1%, Nvidia climbing. So Nvidia down all pre-market, touched as low as 396.50. Look at that, over a $10 move back to the upside already on Nvidia. So 408.20, and is that going throughout the chips? AMD coming back as well. AMD only down 1 1/3%. Taiwan Semi pretty flat. Broadcom pretty flat. Qualcomm bearing some of the brunt, down over 2% now on Qualcomm. NXP semis not doing much. Nvidia is still climbing, holding above 408, 408.25 on Nvidia. Could see some green here. So the Nasdaq, now the top, well, not gainer, but in the lead, down 0.28%. S&P down 0.34%. The Dow down 1/3%. If this Dow flips over this S&P, we can see a little bit of upside here. Still waiting for this to start. Pipe down, dogs. Yeah, ECB forum, Bree. Yeah, they must have had something else going on before, and they're on like they're on a break, so it should be coming up. All right, sorry. This still hasn't started. Yeah, I'm not sure where Potty Mouth is. Michael J. Good question. CCL. So hit that high 1636. Man, I should have bought the dip on. I should have bought this when that overreaction happened. Arctic. $16.29 now. One second, guys.
Changing on a weekly basis, but we
after a time inflation was target, and we will do what is necessary. I understand there's more tightening power coming through. Really, policy hasn't been restricted for very long. We started at negative real interest rates, and we've now moved up to where we have the restricted territory.
It's great to talk to you. We haven't heard much from you outside of your policy meetings in Japan. I think the world wants to know why you're the global outlier here. You have decided to maintain your easier monetary policy in the face of rising inflation. Why?
So a simple answer would be, although the headline rate of inflation is above 3%, which is well above the 2% inflation target, we think underlying inflation is still a bit lower than 2%. That's why we are keeping policy unchanged at the moment.
Even though we've seen measures, including core, right, higher than the 2% level.
Yeah, the usual core is also above 2%. But let's say, let's look at the rate of increase in wages, which is an important determinant of underlying inflation. It has risen, but is now running at around 2%. Now, if you want a 2% inflation rate, wage inflation that's consistent with that would be slightly or well above 2% if you assume productivity growth rate is positive. So there's still some distance to go, we think.
And as a result of your policy being different than all these policies of your colleagues, the yen has gotten very weak and continues to weaken by the minute. Is it too weak?
Well, the yen is being influenced by many factors other than our monetary policy, including the policies of these three banks. So we'll see. We monitor the situation very carefully.
Monitoring the situation?
Yes.
For intervention purposes?
No. It's the jurisdiction of the Ministry of Finance. Decisions on intervention.
President Lagarde, how much would you like to see inflation moderate from these levels? Because we've already seen a nice moderation. For you to feel comfortable taking a pause or potentially going the other way?
Well, this is not what we're considering at the moment, okay? But if I look back at what we've covered, inflation was, I think the highest reading we had was 10.3. We are now at 6.1 headline. Core has moved a bit down, but we are really looking at both headlines, which is the measurement that we have agreed in our strategy and that is visible for people, for the consumers of Europe, but we're also looking at underlying inflation. And on that front, you know, we are not seeing enough tangible evidence of the fact that underlying inflation, particularly and moving down. So we're looking at as many measurements as we can because we want to be in sufficiently restrictive territory for long enough so that we are confident that we reach our 2% medium-term target.
Why is it so sticky, Governor Bailey? And why is your inflation rate higher than that of Europe's?
Well, let me distinguish headline and core for a moment. So with headline inflation, I do expect it to come down markedly this year, as we've been expecting for some time. And a lot of that is to do with the fact that the unwind of energy measures in the UK is on a sort of somewhat longer track, so that we will see some quite sort of discrete sort of jumps down in headline inflation. And you know, energy prices are now somewhat weaker anyway than we thought they would be even quite recently. So it's core that's the issue, just as Christine has said. Core is much stickier. I think I come back to the labour market again. We have a very, very robust labour market and strong labour market in the UK. One of the striking things about the UK is that the size of the labour force is smaller than it was at the outbreak of COVID. So we have had a shrinkage of the labour force. We're seeing some reversal of that now, but we're still not back to where we were pre-COVID. So that is causing the position in the labour market to be very tight. And I see this when I go around the country talking to firms, because what they say to me very frequently is as much as they can, even in the event of a downturn, because they've been concerned and it's been difficult to recruit labour. So that's certainly taking place. So I would say there's a backdrop of a very tight labour market going on.
Is it Brexit related also?
I don't think Brexit is a part of that labour market story. I think a lot more of it is actually to do with, frankly, the response to COVID. I mean, we've seen people. UK is a little unusual in this respect. We saw people come out of the labour force during the COVID period. Other countries have tended to see that position reverse more quickly and more strongly than we've seen in the UK.
Governor Wada, when it comes to the inflation path for you, I mean, I know you'd like to see take for you to really strongly consider abandoning the yield curve control and negative rates.
So we have a forecast or projection of inflation path that looks like this year on declines in import prices, and it's spilled over to domestic prices. And from there on, we are forecasting some increase in the rate of inflation into 24. But we are less confident about the second part. If we become reasonably sure that the second part is going to happen, that could be a good reason for a policy change.
If you see a steady increase?
If we are reasonably sure that the second part of the forecast is going to
But
materialize.
didn't you learn from these three that inflation turned out to be not transitory?
Excuse me?
I mean, wasn't one of the lessons from the last year that inflation wasn't transitory and that there are some elements in it, was not?
Yeah.
And that there are some elements of it that are sticking and proving difficult to fight?
Right. So the second part is the sticky part. But it's still, as I said, we think less than 2%. We hope to make sure that it's going to go up to 2%.
Chair Powell, we've seen some progress in the U.S. Certainly, if you look at the headline CPI from 9% down to 4%. I know you're focused on core, but what would make you feel better about it that you could remain on hold?
So the progress on headline inflation coming down is certainly welcome and ought to help keep inflation expectations anchored. But I think it actually helps to think about core inflation broken into three pieces. The first of which is goods inflation. And we've seen goods inflation coming down for 6 months now. And that's because supply chains are improving, the shortages are more or less gone, and also because consumption is moving back to services and away from goods. So that part of the story makes sense. Housing services is the next piece, and between that and goods, you have a little bit less than half of the total index. And you see now the new rents that are coming in are at lower increases or no increase, and so there's significant disinflation in the pipeline there, but it's going to take 12 months or 18 months to get there. The place where we haven't really seen much progress is in non-housing services, which is a little more than half of our core PCE inflation index, and that's hotel services, travel services, food service, financial services, healthcare, those things. It's a generally very labor intensive. Some of it's quite cyclically sensitive, but some of it's not. The point is, that's where we're not seeing a lot of progress yet, and the reason is that we're one of that sector, and so what we need to see, we've seen a lot of signs of softening in the labor market, but it's just kind of beginning. We need to see a better alignment of supply and demand in the labor market, and see some more softening in labor market conditions, so that inflationary
basis points of tightening already in a little over a year?
Yes, I think widely it's been surprising that inflation has been this persistent, but I think the bottom line is that policy hasn't been restrictive enough for long enough to as the labor market conditions go more into balance between supply and demand. And we would expect to see inflationary pressures subside in that sector as well.
Do you guys coordinate? Do you talk amongst yourselves?
Yeah, of course we do. Where we have an expected catch down, where manufacturing eventually will align, or services will align on manufacturing, and that would be the logical consequence of the lag time that it takes for services to. The catch up is that of labor, because it is, as Jay said, labor intensive. It's generally relatively low productivity and low skilled jobs in those sectors. Catch down, catch up will be resolved is going to be critically important for where inflation is heading. Because if we see inflation going down in that service sector, and movement of wages
Yeah, it sort of raises the question, Chair Powell, about whether we need to see a much higher unemployment rate in the U.S., and you're all dealing with a tight labor market, to finally really break inflation.
So, that the way we think of job openings that still exist in the labor market, so it's still set 1.7 job openings for every person who counts as unemployed. That has been coming down. Actually, the number of job openings has come down now by almost 2 million. And what you're seeing is wage pressures. They're still high, but they're definitely coming down. You're seeing surveys of workers and businesses suggest that the labor market is not as tight as it was a year or two ago. So you're seeing a job creation is beginning to come down. There are a number of indicia that would suggest that we're getting the softening that we need. We're getting it slower than we'd expected, but nonetheless it's happening. So it's still a possibility there. But it's so uncertain right now. That, in my view, the least unlikely case is that we do find our way to better balance without a really severe downturn. I think there's a significant probability that there will be a downturn as well, though, but it's not to me the most likely case.
That's the hard landing scenario.
Or just this, I wasn't even thinking of hard landing. I was thinking of even a recession. To me, it's not the most likely case, but it's certainly possible. And of course, many forecasters do predict that.
Is Europe in recession, President Lagarde? I mean, we've seen 2 negative quarters of GDP. I don't know how you define it. But
I think the first quarter of 23 was actually completely flat, wasn't negative. So technically, I think you could argue that we did not see a recession, but it's stagnant, to say the least. And the expectations for Q2, particularly in the industrial sector, if I look at PMI numbers, are not giving us great hope that there will be a strong recovery. We see a second half of 23 up from the first half, certainly, but moderate. We have a 0.9 forecast for the whole year.
do you agree with Chair Powell? Do you think you can get away with this tightening cycle without dragging Europe into recession?
Our baseline does not include a recession, but it's part of the risk out there.
Are you willing to tolerate a recession?
Well, the interesting thing for us is that if you go back to last November, when we did a forecast, we were predicting quite a long but quite shallow recession. And the economy, as I said earlier, has turned out to be much more resilient so far. Now, I think you can sort of point to a number of things that underlie that. One of the things I would point to is the fact that we've had a very sharp fall in energy prices in Europe. And that obviously has helped with the whole question of the terms of trade shock that we've been having. It's done quite a bit to reverse that terms of trade shock, and that feeds through into national income. So I'm not surprised that what was surprising, but actually very helpful, was that, of course, we did have this big fall in energy prices and a much better winter, frankly, than we thought we would have. So, yeah, we're going through this year now in a more resilient position than I expected. So we're not currently forecasting it.
Is economy faring? I mean, it's very exciting if you look at the Japanese stock market at a 30-decade high. What's happening fundamentally?
It's doing fairly well. I mean, apart from the contribution from some inventory investment, domestic economy is expanding at a pace slightly above potential, I think, driven by pent-up demand. We relaxed pandemic-related restrictions in May, and this is stimulating consumption and investment. There's also green GX, DX-related business fixed investment taking place. So investment is fairly strong at the moment. We think the economy is going to expand at slightly above potential for some time. But there's, of course, a lot of uncertainties going forward, including what may happen in Europe and the United States.
I asked if you guys coordinated or talked about monetary policy before. I mean, does that happen? Should it be more coordinated? Because you're all doing different things right now.
Well, I mean, if I start, I mean, obviously what we don't do is say, what should we do, what should you do? Because we're all setting the monetary policy for our areas, and that's the law in all of our areas, actually, so we don't do that. But we do talk a lot, and I think it's important. I mean, it's important at all times, but it's particularly important in recent times at the moment because we're facing such big global shocks. We've got common shocks. They differ a little bit in terms of their impact and their effect, but there's some huge global events going on that are affecting all of us. So, I think we do talk quite a lot and we see each other quite a bit because it's important we do that. And, we share wisdom on how we're sort of interpreting the things that are going on around us.
Yeah. I guess we are in a flexible exchange rate world, so we do policies independently. But of course, we exchange information, which is very, very valuable.
Do you think that, Governor Ueda, do you think that they are over-tightening?
No.
No, you don't. You approve of the policy. You've had a very tight labor market for a long time in Japan, even before
COVID?
Yes.
Demographic issues
Demographics.
there, yeah.
It's working in a way to tighten the labor market for quite a long while. And it's going to continue this way for a while.
I mean, the economic conversation, it gets into an interesting question, Chair Powell, where now we're wondering, you know, easier to fight inflation last year when the economy was doing better, but now that we're seeing signs of softness and weakness in manufacturing, and you mentioned the labor market starting to cool off, about overdoing it and the risk of overdoing it. Do you wonder about that, or you're still just focused on inflation?
Let me say the U.S. economy has actually been quite resilient, and the data that we're still seeing, including since the last meeting, still is consistent with with an economy that's resilient and growing albeit at a modest pace. As I mentioned earlier, though, yes, there was no question. The first question was how fast should we go, and we went pretty fast, and we got to a level that we believe is restrictive. We're in restrictive territory. If you take the federal funds rate and you subtract some forward-looking measure of expected inflation, you'll get a significantly positive real rate, meaning we're probably in restrictive territory. So, and I think we have steadily slowed the pace of our moves, and it's appropriate to do so for one reason, because the more information we get, the better decisions we'll make. The risks of doing too much versus doing too little become more in balance. I wouldn't say they're in balance yet, but they're becoming closer to balance. I still believe and the committee clearly believes that there's more work to do, that there are more rate hikes that are likely to be appropriate, though.
So you think the risk is still of doing too little and not getting control of inflation?
Yes, and of course
But inflation expectations are, I don't have to tell you, very well anchored.
No, but the thing with the risks is that there may be social costs associated with restoring price stability. The social costs of failing to restore price stability will be higher in almost all likely cases. We've seen what that looks like, and it's just something that we have to do. It's one of the principal things that society counts on us to accomplish, and I think we all feel committed to accomplishing it. It is of course a good thing that inflation expectations have remained anchored all this time, but our understanding of inflation expectations is not a precise one, and the longer inflation remains high, the more risk there is that inflation will become entrenched in the economy. So we have to, the passage of time is not our friend here.
What about a higher inflation target? I know none of you want to talk about that, but on Wall Street, there's this idea that a lot of things are changing in our economy structurally. The onshoring of supply chains and chip plants and all of that is going to be expensive and could permanently create higher inflation rates. Couldn't it, President Lagarde?
Well, at this point in time, and given the fight that we lead against inflation, the yardsticks that there is, the strategy that we've agreed, the expectations that we have, and the inflation targeting, as it has been said, there is no way that any of us, I think, would consider changing the gatepost halfway or more than halfway through that journey. I think it's wonderful to have a forum like Sintra, which brings together academics and other than policymakers to actually consider those ideas and to explore them and to weigh the cost and benefit and all the rest of it. But at this point in time, I think we have to be as persistent as inflation is persistent, and we have to be resolute and decided and determined in reaching the target that we have set, and not debate the target as we are running that race.
But it does raise the question, Governor Bailey, about how far inflation will come down to.
It does, but let me reinforce what Christine said. What is the inflation target? It is the definition and practice of price stability. In our legislation, it is what price stability is taken to be. That is the 2% target. And I don't think anything has changed in terms of what we mean by price stability. And I think that's a very important point to start with. It's the anchor that we have to always maintain. Now, in terms of bringing it down, yes, I mean, we're facing, have faced and are facing the biggest challenge for a very long time. But we have to meet that challenge. I don't think it is the right thing to do to say, well, this is all a bit difficult. Right thing to do. I think that would be a very bad thing to do. And I think, although I very much agree Christine was saying that there are things we understand about inflation expectations and things we don't understand about inflation expectations. I think taking risks of that nature with inflation expectations, but also fundamentally changing what we mean by price stability when there's no good reason to do that, I think would just be the wrong thing.
How do you read, Governor Ueda, the inflation expectations? Because they've crept up in Japan as well.
Yes. We've been for a long time trapped in a zero inflation expectations equilibrium. So we've been trying very hard to move this to a 2% inflation, 2% expectations equilibrium. To do so, we had to de-anchor expectations from zero, raise inflation expectations, and in the future, we'll have to re-anchor them at 2%. This is a formidable task. And now we are seeing signs that inflation expectations are rising. But as I said, not to the extent that we are fully in the 2% inflation expectations equilibrium.
It also raises the question, you mentioned the labor market and some of the post-COVID changes about just how COVID has distorted the data and has made travel, for instance, so strong for so long. And I wonder, Chair Powell, how you look at the COVID impact on the economy and how it's changed the way you make forecasts and you think about what's happening right now.
Well, I think there are changes, and we don't know how persistent they will be. Certainly work from home, and you can see the effect on commercial real estate, particularly office real estate and the surrounding retail that's suffering in many major cities. We don't know how long that will last. It feels like some part of that will be persistent and will last. You mentioned the data as well. I guess response rates to a lot of the data that we collect and the other organizations collect, the response rates have gone down, and you're seeing a lot of volatility in some of these data series, more so, I would say, more so than we've seen historically. So the data are even a little bit foggier than they usually are. But we'll be, in terms of what the effects of COVID, it's going to have long-term effects on the economy. There may be loss of productivity. There's certainly been, for a generation of kids, some loss of education and training. I think it's hard to say how persistent all this will be.
What is your level of concern of commercial real estate, since you mentioned it in the U.S.?
It's something that we, of course, are watching carefully. The way it lays out is the large banks don't have large concentrations of commercial real estate, so that's a good place to start. A surprisingly large part of exposure to commercial real estate is in the banks that are under 100 billion. But there, the worry is more banks that have a high concentration, and they're relatively few. So it's something that we're carefully monitoring. Bank supervision has a playbook for this. So supervisors are talking to banks about their concentration of real estate and what can they do and how do they manage themselves out of this. It's something that we're well aware of. It's not a surprise, and we're focusing on it.
Is it one of the reasons you were cautious in the last meeting?
Commercial real estate? I wouldn't say so. No, I just, generally speaking, it was at the last meeting, it was about, what's in the pipeline, how far we've come, what's in the pipeline. I will also say that, though, that the bank stress part of the decision, in my thinking anyway, was the bank stress that we experienced earlier this year. There's a fair amount of research showing that when something like that happens, bank credit availability and credit can move down a little bit with a bit of a lag. So we're watching carefully to see whether that does appear. Of course, tightening in financial conditions is what we're doing intentionally. So we have seen bank credit conditions tighten. The question is, and that's what we're trying to achieve. The question is there another channel of that or a greater amount of that coming from what happened in March? We don't really see any evidence of that, but I think that's certainly in the back of my mind to see whether we do see that.
Yeah, it gets into the question about lags. How long are lags, Governor Bailey? And do you expect to see more?
It's a very interesting question in terms of the transmission of our monetary policy decisions. So if I can just illustrate it with the UK case, and obviously it's not the only part of the transmission mechanism, let me be clear, but it's an important part, and illustrates it with the UK mortgage market. So we've seen a big structural change in the UK mortgage market since the last tightening cycle of monetary policy, which of course, accepting passage of time, was about 20 years ago actually. And that change has been a change from a variable rate mortgage market to a fixed rate mortgage market. Now, I must say, obviously with Jay here, it's not a US style fixed rate mortgage market. It's a much shorter term. So the average term is often around 5 years. But we know, and we think around about 85% of the stock of UK mortgages are now sort of in that part of the market. So we know that the transmission of monetary policy is going to be slower as a result, because obviously it depends upon the sort of the timing and the sequence of those fixed terms coming to an end often. So we have to judge that. I mean, it's another factor and another sort of element of uncertainty that we have to judge when we're taking our decisions, which is how much of the tightening that we've already done has come through and how much is yet to come through. And we know that referring back quite a way into the past isn't going to help us in that respect. So we have to sort of formulate those views afresh. And so it is part of our decision-making calculus is how much more has to come through, when will it come through, and also how powerfully will it come through. And all those things are things we have to take into consideration. And as I said, history isn't going to be a great guide for that, given the change in the market.
So a year? What's a lag?
Well, what you see, and of course you can compute, is the sort of the profile of mortgages coming up for renewal, renewed terms, and we can see that over the next year or so, there's quite a lot of fixed rate mortgages are coming up for renewal. So yeah, we can factor that in. There is another element, I say, of uncertainty as to just how that will work its way through.
President Lagarde, how do you think about the lags?
I think of the lag in 3 steps, if you will. The first one is transmission in terms of tightening of the financing terms that are made available and how markets absorb the decisions that we make. And on that front, we have a good and reasonably rapid transmission. We see it in rates, we see it in volume of loans, and on both accounts, there is a good absorption and a rapid transmission of our monetary policy decision. But that's only step 1. What we need to see is step 2 and how it materializes on investment by corporate, and for households, it's predominantly mortgages. And for the euro area, there is a lot of heterogeneity, because you have markets where mortgages are at fixed rate, markets where mortgages are at floating rates, some that are readjusted every so many years. So we have to look at all those data very carefully. But it seems that the transmission is likely to be less rapid than it had been in the past, because there are many more fixed rate mortgages now in the euro area than there was, say, 15 years ago. And that's not it. We need to see it then, channeled to the third step, which is inflation. So we want to see that transmission strength through step 1, step 2, step 3, and make sure that this is really having an impact in terms of the fight we have against inflation.
Governor Wada, do you worry about the impacts, the lagged impacts of their policies on the global economy and on your economy?
Oh, yes, but for ourselves, we haven't had any serious monetary tightening for 3 decades. I was a board member of the BOJ 25 years ago. Then the policy rate was about 20, 30 basis points. Wow. Now, minus 10 basis points. So,
and it doesn't sound like it's changing anytime soon.
So in terms of that, the lag in the effects of monetary policy could be at least 25 years. We'll see what will happen if we get to normalize policy seriously. But we'll have to be very careful here.
Be careful what you wish for, I guess. So, Chair Powell, are you more worried about the lag impacts than they are because they're still hiking rates?
I don't know. I wouldn't want to compare. I would just say again, so what's different this time is actually, though, that markets move substantially in anticipation of moves. So By the time we lifted off in March of 2022, the 2-year had moved from 20 basis points up to 200 basis points. So financial conditions now move in expectation, and the whole modern communication strategy really helps that along. So that is different. What may or may not be different, and we also haven't had this kind of tightening in 3 decades, really. We've had tightening, but this looks more like tightening cycles from the 70s and 80s. So what we see is a picture of literature that has, the older literature says, a year or two for activity and add a year for inflation. There's new literature that says it's much faster than that, and I think we just have to use our, to watch and see what's happening. There are beginning to be, there are reasons to argue that it would be faster this time or slower this time, but I just don't think we know at this stage.
Well, it kind of gets into the question about the markets, and you're saying that it's a transmission mechanism. You're all talking very hawkishly and saying there's more work to be done and we're still worried about inflation. Markets pretty much think you're almost done, all of you guys. Maybe one more hike in July and then done, and then into cuts next year. Is that wrong, President Lagarde?
I look at the data we have, I look at the mandate we have, I look at the transmission lag, and we've decided for ourselves that we would use 3 criteria. That's what we are focused on. Of course, we are not completely oblivious to what happens in markets, but we have to be guided by what the mandate is, what the data delivers, and what criteria we take into account in order to determine our policy and to establish our stance going forward. That's the only way to go.
But I guess, there's financial conditions, and I don't know, Governor Bailey, are they working against you? You're trying to fight inflation, and MSCI World is up nicely this year.
Well, by the way, the market, I don't think thinks we're nearly done at the moment. They've got a number of further increases priced in for us. My response to that will be, well, we'll see, because we are, as we were saying earlier, we're essentially evidence-driven in that sense. So, we'll make our decisions based on that. I think you're right to point out, as you said earlier, and I would draw this point out, that there are 2 parts to this. There's where the peak is, and then how long it's sustained beyond that. And I think both of those are relevant. Both of those are things that will, sorry to state the blindingly obvious, will emerge with time. But I've always been interested that the market thinks that the peak will be quite short-lived in a world where we're dealing with more persistent inflation.
Right. They did finally price out the cuts in the U.S. a few weeks ago. The market was primed for cuts. I assume you were pleased to see that that's no longer the case.
So if you go back and look at forecasts from the participants on my committee on inflation, you'll see, we've been consistently thinking this is going to take some time. It's going to be a process that will take longer than we would have hoped. And it may well be a bumpy process. But markets have gone back and forth between pricing and appearing to price in pretty quick declines in inflation to coming back to being more in alignment with the thinking of the committee. And that's where we are right now, is closer to where committee participants are. But as Christine said, we're not focused on what the market's forecast is. We have our forecast. All of us who are on the committee, we work hard to develop an understanding of what's driving inflation and what the path forward for inflation is. We make our best estimates. And that still is that it's going to take some time. It's just going to take some time. Inflation has proven to be more persistent than we expected, not less. And of course, if that day comes when that turns around, that'll be great. But we don't expect that. We don't plan for it.
So is it counterproductive to you that the stock market has rallied, the bond market has rallied? The market is fighting the Fed. The market thinks you're closer to the end. And that does make financial conditions easier.
I thought you can't fight the Fed. Wasn't that the...
You can't fight the Fed, but they're fighting the Fed. Is that a problem?
I don't see it that way. I don't look at it that way at all. Honestly, we have different jobs. Our job is to bring inflation down to 2% and sustain maximum employment. That's our job. That's what we think about. We look at the data, and that's what we care about. And markets react. Different parts of the market react in different ways. It's just not something that is a principal focus of our work.
But it did seem last year like you wanted a weaker stock market. You used the word pain at Jackson Hole. It seemed like you were trying to communicate that financial conditions should tighten, and less so this year. Is that right?
Not really, no.
Okay.
Of course, we work through financial conditions. That's what we do. Our rate and our, all the things we do and say work through financial conditions to affect the real economy. That's how it works. But it's broader financial conditions. So we're not focused on any one market. We're never thinking, oh, let's do this to this market. It's just in general, let's communicate what we want to do and why we want to do it, and financial conditions adjust. And that's really all we can do. We do not target particular parts of the market, although, of course, we do monitor market conditions.
So you don't care what the stock market's doing?
I look at broader financial conditions. It's
Okay.
one of many, many conditions, along with interest rates, credit spreads, everything, all of the conditions and the availability of credit. It's one of many, many things. Again, we don't focus on any one thing as the key thing.
Governor Wada, how important is it to you, the markets, as it relates to financial conditions and the mechanism for monetary policy?
You mean the stock market?
Stocks, bonds, currency.
So stock prices have been rising fairly sharply since spring this year. Stock prices theoretically are affected by interest rates and investors' view of the economy. We haven't changed interest rate, so probably investors have become more optimistic about the future of the economy. Of course, we don't want serious financial imbalances in the economy, so we keep monitoring.
How do you think about, President Lagarde, the risks to the economy, especially geopolitical risks? In Europe now we were all glued last weekend to the news out of Russia and the Wagner rebellion, and we're wondering if now political instability in Russia presents a further geopolitical risk to the global economy.
Well, I think we all look at it, and we are all concerned about geopolitical development by virtue of the profession that we have, because it does have an impact on supply chain, it does have an impact on trade, it does have an impact on the uncertainty, and we can only say that at this point in time, uncertainty is high overall, and a big factor of that uncertainty has to do with the geopolitical difficulties and conflict or quasi-conflicts that abound at the moment. So yes, we are looking at that, but do we have to make a moral judgment on this, that, or the other? This is not the job that we have, but it clearly has an impact on how the economy is going to change and be transformed, and whether it will have an impact that is inflationary or disinflationary, I think is also to be determined. I think there will be various schools of thought along those lines.
Yeah, I wonder how you think about next winter. I mean, Europe got lucky.
We hope it's mild.
Yeah. What if it's not?
But storage is, 69%? Michael, the expert on Isabel's panel, said that 69%, and we are going to hit 95% by the end of the summer. So that should put us in a good position for the winter. But I'll say one thing, which probably we had not factored in sufficiently, and maybe that applies to all of us. It's the resilience of our economies and the resilience of the entrepreneur, the corporates, the way in which we have sort of, in a matter of a few months, reorganized ourselves. Just think 1 year back, everybody thought that the German model was dead, that Europe was going to be completely on its knees. Well, these things have not happened, and the resilience has been demonstrated at all levels of society.
I totally agree with Christine on this. That resilience, I mean, you see it when you talk to businesses. I spend a lot of time talking to businesses, and I've spent a lot of time in recent months talking to food-producing businesses to try to understand the sort of, the slower than, frankly, we expected decline in the rate of food inflation. And one of the things that I get quite consistently, and this is where sort of the Ukraine-Russia situation comes through for real, is they say, well, last year we brought forward our sort of supplies to a much greater extent than we would normally do because we were not confident we could actually get them. Consequences, we've locked in higher prices for, sometimes they say 6 months to me. And that, of course, is affecting the passage of inflation, particularly for food prices in this case. So these things do have a very direct effect and are continuing to have a very direct effect, actually.
But there's nothing central bankers can do about that, is there?
Well, I think the first thing we need to do is understand it. That's a good starting point. Well, we have to then design.
You can always just keep crushing demand, but you can't do anything
Well,
about
we have
food
to
supply.
design policy. I mean, we have to design policy and take our decisions with the best. We always take policy. We always take policy decisions on a forward-looking basis. So we have to do it with the best information and understanding we can get of these things.
So do you still? So to what extent, I guess, is the war in Ukraine driving supply-side inflation for materials around the world?
Well, following on from what I was just saying, I think the conclusion I draw from that is, and this is what the businesses tell me, is yes, we are going to see actually a fall in the rate of food price inflation, for instance, but it is taking longer than we expected. So that's what we have to factor in and decide how best, in a sense, to respond to that with monetary policy.
It's not just Russia. Governor Ueda also, we're following the tensions that have increased between the U.S. and China, between Europe and China. Do you think that's having a material impact on global growth?
Well, at least there's a tendency to relocate production sites out of, say, China into other Asian economies, including, to some extent, Japan. So in the short run, this is having a small positive effect on the Japanese economy through business fixed investment. But in the longer run, there will be inefficiencies all over the place. So we'll see.
So Japan's a beneficiary of the flight out of China?
In one sense and in the short run. But in the long run, I'm not sure.
I mean, Chair Powell, how do you think about, it's obviously a risk and it hurts trade. How do you think about the U.S.-China relationship as it impacts the economy?
So that is the way we think about it. Of course, we don't have any role to play in the relationships between the countries. But China's a very large, important economy. It's a big trading partner, mainly consisted of us buying things that are made in China. I don't think, and of course, the Chinese economy came out of the COVID and looked like it was recovering strongly. Now it doesn't look like that. It looks like it's slowed down, and there's some issues there. From the U.S. standpoint, at the margin, that probably means a little bit less global demand. I wouldn't say it's a first-order consideration for us, though.
How does Chair Powell referenced the disappointing nature of the Chinese economic recovery. How does that play into Europe's recovery or the global growth picture?
Well, first of all, I think we have to be attentive to the emerging market economies at large. At the moment, they are producing about 60% of global growth, some of which is now a bit more focused on domestic development and consumption, and less so on trade. But if you look at the trade volume numbers from China to many other countries, particularly the advanced economies, that has not changed significantly. So the trade volume is still significant. And I'm not breaking any news here. The Chinese authorities themselves say that they're likely to have a 5% growth this year in 23 rather than the 6% that they had initially forecasted. So that will have an impact, given the size of the Chinese economy, on global growth at large. We have to, when we do our projections, when we look at the economy, we look at the global economy, and then we sort of narrow down and zoom on the European economy and the euro area in particular. But everything that happens in China, in the United States, in the UK, in Japan, in emerging market economies actually matter for us because we are strongly interrelated and have been trading with each other for a long time. And if anything we've learned from COVID, in addition to the pain and suffering for many, is the fact that we are vastly dependent for the supply of rare earth and various metals that will be critical for the development of the economy of tomorrow if we decide to firmly go towards the green economy that we should be aiming for.
As an open economy, one of the things is just exactly as Christine says in terms of how we do our process. One of the things that we spend quite a bit of time on is world export prices. Now, actually, in the recovery from COVID, and of course this was the supply chain shock, we saw quite a big contribution to goods price inflation from world export prices. We're now seeing those prices definitely start to weaken. So that will be another determinant going forward of policy.
As central bankers, do you plan for the worst case scenarios on the geopolitical front? I mean, if China invades Taiwan, then what? What does a central banker do? Is there a contingency for that, Chair Powell?
We use our tools to achieve our legal mandates, if that happens.
Got that Fed speak down. You'll hold a special meeting. No, I mean, it's a volatile world we live in, right? And then
so
there's
we do
impacts.
have, in every FOMC cycle, we look at, our staff works up 6 or 7 or 8 alternative simulations, and they simulate, different things. It's not so much geopolitical events, though. It's more different ways the economy could play out. And we all the participants read those and think about them and talk about them, and they come up in our meetings, we talk about them. So it's very helpful because you can't get too focused on the modal path in a world where it's just very hard to predict the economy, even in normal times, it's very hard to predict the economy, let alone times like today.
What sort of simulations do you talk about?
I'm going to leave that to your imagination.
I bet I can think of a few. President Lagarde, Chair Powell did talk about, one of the things that I don't know that there was a simulation of is we had a few bank failures in the US this year. And I know it forced some of you into action to shore up banking systems. Are we in good shape now? Is the global and European financial system in good shape? Have we healed?
I can only speak to the banks over which we have supervision, and those are the euro area, the European banks. But I'm looking at the euro area specifically. We have been, enforcing Basel III to the entire banking sector. The capital ratios are very high, 15.3% if I recall. The leverage coverage, the liquidity coverage ratio, very high as well. So we have not experienced the turmoil or the difficulties in Europe. And Europe does not include Switzerland. Thank you very much. But we are extremely attentive. We reinforce the stress testing constantly. We are I'm very pleased to see that the Basel III agreement has now been reached, as I understand, between Parliament, the Council, and the Commission, so that we can actually roll out Basel III with as limited exception as possible. And we have to continue doing that job.
Any lessons that you took, Governor Bailey, from what happened earlier this year?
Well, let me start with a sort of bit of backdrop. I think it's important, drawing on what Christine was saying, I think it's important to, in a sense, reflect the fact that the regulatory changes we made after the global financial crisis have paid off, in the sense that we've been through, and we are going through, some huge economic shocks. And the banking system, certainly I can speak again as Christine does, I can speak for the UK banking system, is resilient to them and is doing what we want it to do, which is support the economy, not the other way around, to be honest, going back to the crisis. So that's an important starting point. Now, I think there are important lessons from, important issues that we have to reflect on from what happened. Christine made her subtle reference to Switzerland. Well, there's a huge sense of irony in the British, Christine. Look, there is obviously a question posed by the Credit Suisse, handling, which is, are the resolution plans for the major banks that we've spent the last 15 years developing fit for purpose, or are they not fit for purpose? And well, come on to that. If they're not fit for purpose, then of course we cannot sit here and say all's fine, because clearly we're going to, regrettable though it would be after 15 years of work, we're going to have to sort of, tear them up and start again. Now, I'll give you my view on it. I'm going to say this. I have not yet heard the case made to me which suggests that they are not fit for purpose. I'm going to state that. But I'm not going to leave it there. We have got to have, we've got to have this out and decide whether, it goes one way or the other. My starting point is I remain to be convinced of that assertion, but we can't let it rest there. I think we've all got the question of, how our banking systems handle, a steep rise in interest rates. We do stress tests to test that. We've got capital provisions for, related to that. And we've all got to think hard. I think the third thing I'd say is we've got to think hard about the speed of run question. But I think we've got to think pretty carefully about that, because if we go to extremes on that argument, we're essentially heading to narrow banking. And speaking of myself, I don't think that is a sensible place to head to. So we've got to think quite carefully, but quite, I think, creatively about how we maintain the banking system that does what we want it to do, which is create credit in the economy, create assets that are naturally illiquid, and deal with this speed of run question. And we've got to take that one on.
We're actually going to get stress tests this afternoon in the US, which I won't ask you about, Chair Powell. But I will ask if you think that the US regional banks are resilient right now.
I do. So I think, first of all, I think the overall banking system is strong and resilient with very high levels of capital and liquidity, double the levels that they were at, and then some before the crisis. So the innovations that we put in place, the regulatory changes and higher capital, those are all in place in the United States as well. So when it comes to the events we had earlier this year with 3 banks that had pretty idiosyncratic business models and funding models as well, I think we need to learn lessons, and we're not hiding from that at all. We understand there going to need to be regulatory strengthening of both regulatory and supervisory practices as it relates to institutions of that general size, I would say.
You got a lot of questions on that from Congress last week.
That's mostly what they wanted to talk about.
They want to make sure that you aren't, well, in part, not going to increase capital levels and sort of choke off the small and regional banks in this country and make it hard for them to compete.
So the U.S. has something like 4,500 banks. It's the most banks by a pretty big margin, I think, of any major economy. And we think it's a real benefit to have banks of different sizes and business models that serve local communities and offer different products, as well as having the large banks. And the large banks in the United States are very strong, well-capitalized, a lot of liquidity. And they've been a source of strength, I think, through the last couple of events. So I think it's important that whatever changes we do make, keep in mind the need to preserve the business models of these of smaller banks and not just of the largest banks.
Any concerns for you, Governor Ueda, on the strength of the global financial system at this point, as we go through this, I don't know, once in several decades tightening period?
I can only talk about Japanese banks. Mm-hmm. I think they are well capitalized. They're capitalized. They have enough liquidity. It's true that some smaller banks, regional banks, are sitting on non-negligible amount of valuation losses on their security holdings. But on average, that's about 1% of their core loan capital. So it would be okay. But if we do get to normalize our monetary policy, because we go into the 2% inflation rate equilibrium in the sense I discussed earlier, then rates may go up by large margins. And we will have to be careful. We'll have to be carrying out all sorts of stress tests, I think.
I also wanted to ask you, if you go into a more normalization stance away from negative rates and the yield curve control, how you'll manage the risk of the government's enormous financing needs, and whether that's a concern that you think about.
Well, we keep saying that it's the business of the government and the Diet to create sustainable government finance.
Fiscal policy in general, I'm curious if you guys will bite on this. Is it helpful right now or hurtful, President Lagarde?
Everybody has to do what everybody has to do. Man's got to do what a man's got to do. Monetary policy makers have to decide on monetary policy, and fiscal policymakers have to do their job. It is true that there are circumstances where working hand in hand and supporting each other has proved helpful. I think we had a very good demonstration this morning in one of the lectures that we had. I think what we have very clearly stated as a governing council of the whole Eurosystem is governments, please it's time now to roll down the measures that you had decided for COVID and for energy purposes, and that you adopt a path that will take you to better sustainability of your public finance. So we hope to see that. The fiscal space that has been allowed for the various non-conventional fiscal support that were decided back in 22 and 23 very much should be rolled back in the course of 23 and certainly should not be expanded in 24, bearing another major shock. But that's our recommendation, and we make it very clear in our monetary policy statement and have made it very clear in the last statement that we issued.
I mean, we learned in the UK, what was it last year, when monetary and fiscal policy don't work together, it can be a big problem.
Well, because what we had to deal with in the UK last autumn was actually a financial stability issue, and we dealt with it, and it was very clear that that was the issue we dealt with. We didn't deal with anything more than that. It's not our job to get involved in fiscal policy in that sense. And we always, when setting monetary policy, take fiscal policy as announced, as a conditioning sort of assumption for our decisions. So I don't go beyond that in terms of commenting on the stance of fiscal policy. I mean, the one thing I've said in recent times, and I don't mind saying it again, is that I welcome the fact that the Chancellor is very much using fiscal policy to try to address a comment about the stance of fiscal policy about more or less. It's a comment about the fact that, going back to the point I've made about labour markets, and actually the low potential rate of growth in the UK economy, that the more we can do to tackle that, frankly, the better.
What about you, Chair Powell? I mean, there's been a lot of fiscal largesse in the United States, the COVID stimulus, and now even new policies that are just filtering through, like Inflation Reduction Act, infrastructure, CHIPS. There's still American Rescue Plan Act money getting doled out. Isn't that making your life harder?
Well, so echoing my colleagues, our assignment is to deliver price stability kind of regardless of the stance of fiscal policy. And we don't play a role, formal or informal, in advising the fiscal authorities. There are other agencies in Washington that do that, and that's really not our job. I will add, though, without crossing any lines, that the spending during the pandemic was very high, and it's come down. And so we look at the fiscal impulse from the level of spending, and it's really not material. It may even be slightly contractionary, but let's just say it's flat. You identified those bills, and I think you are seeing some of that money showing up in construction. This construction numbers, it's supporting construction activities, particularly the infrastructure bill. But I wouldn't say that that's if you look at where the inflation is in the economy, I wouldn't say that that's an important driver of inflation or something that we think about or consider.
So you mentioned the consumer. So the excess savings, you think have pretty much come down. Where do you think the U.S. consumer is headed?
The consumer had savings from two sources. One was just the fact that people couldn't travel and couldn't kind of spend money on services. That was a lot of it. And there were also the fiscal transfers that happened. And those, there are many different estimates. I would say for people at the lower end of the income spectrum who tend to have a high marginal propensity to consume, most but not all of that money is gone. So there's certainly some residual support for spending in laws that passed at the beginning and during the pandemic. But that's, again, I wouldn't say that's today the main driver. I think if you look at the strength of the labor market, still creating more jobs than there are new entrants to the labor market, and wages are still pretty high. So you're driving up disposable income, and that is driving consumption, and that's driving the economy.
Wanted to also ask you guys about the balance sheet, very hot topic. Governor Wade, how do you think about the expansion of the balance sheet, and how much is too much?
Well, it's a tough question to answer. At the moment, we are using government security purchases to hit the range for the long-term interest rate we have set, which is 0 ± 50 basis points. So the size of the balance sheet is an endogenous variable.
The rest of you are kind of in shrink mode in the balance sheet, or roll-off mode. You've been more aggressive, Governor Bailey. Has it gone smoother than you expected?
Well, so far, I don't want to tempt fate, it's gone very smoothly, actually. By the way, the reason that you say more aggressive, just to be clear, is that we've got a longer duration of bonds in our portfolio, government bonds in our portfolio. So leaving it to an organic runoff would mean a lot longer runoff for us, I think.
That's why you're outright selling.
So that's why we're selling. And so the target we set for the year, the 80 billion target, was the sum of the natural runoff plus the difference between the target we set and that. And it's that element that we're doing as active sales. So that's gone, I would say, very smoothly, actually, so far. I'm very happy with the way it's gone. I think the second question that we're certainly looking at actively, of course, is just how far will we go? And I look at it particularly in terms of the stock of reserves now in the system before we hit what I would call the equilibrium level of reserves. Now, we may go on selling the QE stock below that because we would shift our operations around. I would expect to do that. But it's important to focus on where we think that sort of natural level of the balance sheet, which won't be constant over time, by the way, but where we think that natural level of the balance sheet is relative to where we are today.
How do you think about it, President Lagarde? And is there pressure building for you to go faster when it comes to shrinking the balance sheet?
I would say that the interest rate is the primary tool that we're using at the moment. Second, there is almost a contractual reduction of the balance sheet of the ECB because there is a reimbursement of the TLTRO that we had put in place during the pandemic, and that is actually happening now, if not yesterday or the day before. Third, as of the 1st of July, we will stop any reinvestment under the asset purchase program. So there is a natural declining of the balance sheet of the ECB, which is only a first step. We are discussing our operational framework. Hopefully, we will be able to complete that work in the next 6 to 9 months, and that will really determine the size, the desirable size of our balance sheet, which is always a factor of also the circumstances and the situation we are in. But that is coming.
Is it going smoother than you thought it would as well, Chair Powell, QT?
I'd say it's working as we had hoped and expected it would work. We have a entirely passive program. As treasuries and mortgage-backed securities mature, they roll off subject to a cap, and it's been moving along at a pace. The underlying pace, if you hit the cap, is about $1 trillion a year. And reserves appear to be quite ample, so it has ways to go.
Is there anything that would make you speed that up or slow that down?
We always say that we're prepared to adjust in light of evolving conditions, but I don't see anything that would cause us to want to do that right now.
Okay, so in the moments that we had left, we've talked about a lot of the risks. We've talked a lot about some of the concerns out there. I want to hear some optimism, maybe, and what makes you feel, none of you are really talking doom and gloom on recession, but what makes you, President Lagarde, optimistic right now?
In my professional field?
However you want to interpret the question. Personally?
Otherwise, there are lots of things that make me happy, and I hope for all of you. I'll just mention one success, which I'm really proud of, and I'm very proud that Fabio Panetta was the one who led that exercise on behalf of the entire group. Today, the European Commission has published the legislative draft for the European digital, for the digital euro, for our CBDC. And that gives me hope because I think that it really demonstrates the capacity to innovate, the capacity to work as a team, the capacity to anticipate what digital payments will be tomorrow. Now, some people are very skeptical and they say, well, you're taking risk, financial stability, possible runs that will be accelerated by this. And all I would say is, number one, you have to be ready. You want to keep the sovereignty of your currency. So many years ago, who would have thought about all the users and the applications that you have on your cell phone? None of us. So being prepared, being ready, paying attention to what actually Europeans and particularly young Europeans want in terms of currency and form of currency is something that we have been doing, that we have accelerated, that we have not decided for sure, but at least the legislative piece is on the table. There will be a lot of discussion. And that's, in a way, also the result, one of the good benefits of COVID. We have talked about the downside of COVID and the consequences, but the way in which so many of us have become more digital, better equipped, probably more productive. It will be demonstrated probably with a lag time. But when I look at my member states, the countries that were least digital have really traveled very fast to become much more digital. So that's a good reason to hope. And the resilience demonstrated, but I have mentioned that earlier on, by everybody, from the individuals to the entrepreneur to the corporates to governments. We, in Europe, decided to get together to borrow jointly, despite the fact that it's laborious, that it's painful, that it gives a lot of things to report about to a journalist, is also a sign of progress.
And just to be clear, a digital euro will happen when?
That will be decided by the governors in Governing Council. We will decide that at the end of October. And then there will be another phase of piloting, experimenting, fine-tuning, because if and when we go, as will be decided by the Governing Council at large, we want to get it right. So we're not going to do a half start or a fake start. We will move with success.
What makes you optimistic, Governor Bailey?
Well, actually, I'm going to build on Christine's theme, because as well as we're also working on retail digital euro, we're actually also working on wholesale digital money and completely rebuilding our wholesale payment and settlement system in the Bank of England to enable what could be a complete revolution in the infrastructure of financial markets and trade finance. And this is very exciting. So we put the wiring in the weekend before last. The engine should go in next year, and this has enormous potential to change the world, and at the wholesale level as well.
It's interesting, I feel like the world has moved on to AI beyond digital payments. Are you guys incorporating AI into your thinking about economies and your toolboxes?
I think we're all on a learning curve. I don't know, I feel quite old when it gets to this, but yes, I mean, we're looking at it in two respects, certainly. One is, three respects. One is how it will affect the economy. Two, how we can use it ourselves, both in our sort of, analytical functions, but also actually in our operational functions. Yeah, we're looking at it, I would say, with very open eyes. You can see the strengths and you can see the current weaknesses of it. And of course, it moves very rapidly. So yes, we're having to, certainly I can speak for ourselves, we're having to devote quite a bit of time now to what the potential is for that.
Chair Powell, is AI one of the things that makes you optimistic?
So on AI, we're just doing what everyone else is doing. We're trying to get smart about it, and it obviously has huge possibilities. Technologies tend to, propagate through the economy fairly slowly, and this one may be the exception, maybe not, I don't know. But it's something that we're spending a lot of time on, way too early for conclusions. I wouldn't use optimism, but I would say this, in answer to your first question, which is, when inflation first arrives, it's really due to very strong demand for goods and goods pipelines that just aren't working, and shortages. So that's where it comes from. It wasn't about the labor market at all, right? Or very much. As we get to this stage and to looking forward, we think it will be significantly about getting the labor market, supply and demand, back in alignment. I would say it's a positive thing. I'll say it that way. It's a constructive thing that we've been able to raise rates 500 basis points with the expectation of going further, and we still have a very strong labor market, but nonetheless one that is in fact cooling in just the way we would have hoped, which is to say through things like lower job openings. Job openings are coming down. The quits level has returned to its pre-pandemic level. Wages have, if you look at employment compensation index or average hourly earnings, they've moved down about 1% towards more, still very high, but towards more, so a more sustainable level that's consistent with 2% inflation. So I would just say that's the makings of, if that process continues in a gradual way without really any effect on employment, the longer that goes on, the better. And in a way, I take that as a very constructive path. It is not guaranteed, but the fact that this is really there, and that's what's been happening for a year, more than a year into our tightening cycle, I would take as a positive thing and perhaps a hopeful one for the future.
Just be careful not to overdo it, right?
Right.
What about you, Governor Wada?
Let's see. As other central banks are thinking of issuing digital monies, we are taking a different route. and we have decided to issue new currency bills starting next year.
You're going all in paper.
This will cheer up public's confidence in the BOJ. more seriously, as I said, wages have started to rise at 2% or so for the first time in 3 decades. More importantly, we are seeing as a sign of a change in inflation expectations, changes in price wage setting behavior of businesses. So previously, businesses hesitated to increase prices because if they did, others will not follow suit. Now say they are raising wages because if they didn't, they will have trouble recruiting workers because others are raising wages. We think this is a good sign for us.
So the topic of Sintra of this ECB forum is inflation, volatility. So now is prediction time. In 1 year, when hopefully I'll be invited back, President Lagarde, inflation rate in the UK is what?
Well, our last forecast, we expected inflation to come back to target towards the end of next year. We're going to start the next forecast in about 2 weeks' time.
I was trying to
get
a jump on
further than that. Yes.
Yeah, I was trying to jump on that. Do you get to 2% by this time next year, President Lagarde?
Well, you said a year from now, right?
Yes.
Okay, so the projection we have is 3% for next year. Headline.
Will you be satisfied with that?
I want it to be timely. We all want it to be timely.
Timely, okay. Chair Powell?
I don't see us getting back to 2% this year or next year.
You don't?
No. I see us making progress, steady progress on, this is core inflation.
Yep.
Headline inflation is coming down now, is lower than core. But for core inflation, I don't see us getting to 2% this year or next year. I see us getting there the year after.
2025?
Yeah.
Core inflation 2%. So you're going to be restrictive for a long time.
No, we will be restrictive as long as we need to be. But you know, if inflation is coming down sharply and we're confident that it's on a path to 2%, you know, that would be a different situation. You would begin to think about loosening policy. But we're a long way from that. That's not something we're thinking about now or in the near future.
Governor Ueda, are you going to get to the 2% by your measure?
So our projection as a April inflation projection has for 23 fiscal year 1.8%, 1.8 headline, 2.0% for 24. Now, this makes my job of justifying underlying inflation rate staying below 2% a bit harder. But we keep saying that we don't have a lot of confidence in this 2024 forecast. This may change depending on the data to come out.
Do you guys feel you've been through a lot of hard moments, you know, COVID and the inflationary challenge, and now we're starting to see economies weaken. Do you feel like it's a particularly difficult point in your central bank journeys, Governor Bailey?
Yeah, until we get inflation back down to target, yeah, we've got a very big job to do, and it's a job we have to do. Well, I don't know about stressful, but I think, you know, look, we sign up for this job, and you don't get to determine the conditions that you do it in. So we just got to do it. I mean, that's our job.
For you, President Lagarde?
Likewise. Man's got to do what a man's got to do. We signed up for the job, and a woman's got to do what a woman's got to do as well. Thank you.
Chair Powell, haven't seen you stressed.
Sorry?
I haven't seen you stressed.
We have a job to do. We know that. We know that society's counting on us to do this job. And that it really matters. Price stability can matter for decades. It can benefit for people over time. I think we all know that, and we'll do the things that we need to do to restore it.
And Governor Ueda is feeling good.
I didn't know there was going to be so much traveling and so many press conferences.
Welcome to the world of central banking. Thank you all so much for taking the time today and all my questions. It was a pleasure. Thank you.
Well, thank you for that excellent closing panel to the event. Sarah, you did a great job of chairing there, and thanks a lot to all of our panelists. Very nicely done. We learnt a lot about your commitment to stay firm until you hit 2%, however long it takes. We learnt about the strength of labour markets and the resilience too of the economy more broadly, as well as some very, very, very long lags. So with that in mind, I want to turn now to the final part of our programme, which is about another way in which the Sintra Forum has been persistent, and that is in seeking the young economists who can provide answers to the challenges future generations face. So the final part of our programme is to award the prize, chosen by an expert panel, as well as taking your votes into account for the best paper by some of the most promising young economists in the world. Madame Lagarde, I'll leave it up to you to announce the winner.
Thank you very much, Claire. And please do not go, especially the economists in the room, because here is the future. And the future is those 10 young economists, PhD students who were shortlisted from many other applicants and came from all over the world to present their research here in Sintra. It is really important to discover and encourage young talents. These people will be the bright minds of tomorrow. They will lead our economy through future challenges. The papers that you shared, you all in the back of the room over there, the papers that you shared and that you presented to many of us earlier today offer fresh perspective on challenging central banking issues that we face today, such as changes in inflation expectations, green investment, transmission of monetary policy, open banking, customer data sharing, you name it. All submissions were assessed based on their academic quality and policy relevance. Many, many thanks to all of you who rated the papers and thus helped us to select the winner. I would also like to thank the members of the selection committee for evaluating them, namely Jordi Galli, professor at Pompeu Fabra University, who presented this morning, who discussed the paper this morning, to Hélène Ray, professor at London Business School, and to my EC colleagues Philip Hartman, Isabel van Steenkist, and Jirka Slakalek. To all of you, thank you very, very much. Now, what I would like to do before I announce the winner of the trophy and the 10,000 euro check that goes with it, sorry, we'll transmit digitally probably, I think we should give all of them a big round of applause and recognize them. So I know that this is a bit nerve-wracking for some of you, but it's time now for the announcement of the one who is actually receiving the trophy. The trophy is going to come along, I'm sure, somewhere. Oh, the trophy is here. Excellent, very good. So the winner of this competition is Lucas Nord. Lucas, congratulations. So for those of you who did not have a chance to listen to his presentation and to have a look at his big table, Luca is a PhD student at the European University Institute in Firenze, and he is receiving this award for his paper on, I quote, shopping, demand composition, and equilibrium prices. The paper analyzes how the degree to which consumers shop for bargains influences retailers' price-setting strategies. Lucas finds that this mechanism reduces inequality and helps to explain the amplification of aggregate shocks through reactions in firm marks-up. Our warmest congratulations to you, Luca, for this very well-deserved award. And let me now give you, so you can hold it and be photographed with it. You are here receiving the trophy of the ECB Forum 2023. Congratulations.
You can, perfect. Thanks a lot, President Lagarde, and thank you also to the jury who selected me, or by the public vote, I guess all of you. Thank you very much. It's really an honor to receive this award, and it's a particular honor to receive it in like very, very nice company. So I spent the last 2.5 years, 2.5 days, it feels like 2.5 years by now. I spent the last 2.5 days getting to know an amazing group of young economists. And I think like, I can only agree with President Lagarde. If this is the future of economics, I think the future of economics doesn't look too bad. So thank you very much, and maybe join me again in an applause to all of my fellow finalists. Thanks.
Well, now I believe it's time to bring this to... You can stay here if you want, because as you say, you look pretty good. Stay. We want you to keep at it. But it's time to bring this conference to a close. I'm sure you would agree with me that we had really excellent, rich discussions, great papers were presented, great discussions. Actually argued eventually or found room for further discussions on all the 4 papers, and the 2 panels that